It's 7 minutes after 10 on a Friday morning. That means it's time for the Real Estate Fix with Rich. I'm your host, Rich Szerman. Thank you guys for tuning in. I always like when people listen. It makes it so much more fun for me. Like I said, you're listening to the Real Estate Fix with Rich. Got a little bit of a different show today. I'm going to mess with the format just a little bit. Got some exciting stuff to go. We're going to do a very brief kind of market wrap-up, and the wrap-up is if you know a realtor, go give them a hug because the market is in rough shape. Just the volume is so far down that everybody in the real estate industry, title, escrow, etc., they were all feeling the pinch because there's just fewer properties being sold. But we're going to get into kind of what's going on and where it's going. We're going to talk to Rebecca Franklin, the president of HFA Homeownership Relief Corporation, which I'm very much looking forward to. Rebecca is, HFA is doing some great stuff with mortgage relief programs and all sorts of stuff. They have a great program where you can literally get up to $80,000 in cash for free. You do not pay it back if you had a COVID-related issue that caused you not to be able to pay your mortgage. We're going to talk about that when she comes in today. And we have, from my staff, Stephanie Vargas is with us. I asked Stephanie to come on. She was not crazy about the idea, but I asked Stephanie to come on because if you're in trouble, if we're helping you out, if you have a mortgage issue or if you've got a property issue and you need help, if you've got a problem that we're fixing for you, which again we do for free and we do for everybody. Stephanie's one of the people in the office you're going to interact with most, so I thought it might be nice for everybody to kind of meet Stephanie. So, listening world, Stephanie, listening world, say hello.
Hello.
There you go. That's Stephanie's first time on the radio, so that's fun. But anyway, I wanted you guys to meet her. We'll be talking about some of the stuff that we do when somebody comes in with a problem and exactly kind of what we do. Because one of the questions that I get most often is, okay, we've talked to you. We think you can fix this. That sounds great. Now what do we do? And so we're going to get into that a little bit today just so we have that out there. So it'll be fun. But let's talk about the market in general, and then we'll get into all that other fun stuff. Starting with, the current state of the market. I'm going to read you this piece here from Forbes because I think it's kind of really emblematic of where we're at. According to Forbes, mortgage rates, which loosely follow the federal funds rate set by the Fed, spiked to about 3%, spiked from about 3 to 6% in a 6-month span over the last year as the central bank hiked interest rates at its quickest pace since the infamous Paul Volcker-led campaign 4 decades ago. Mortgage rates are still far below where they were in the 1980s. If you remember, in the 1980s, they reached 18.5%. When they spiked at more than 18%, this hiking cycle overseen by Fed Chairman Jerome Powell has yet to result in severely painful economic conditions. I would disagree with that. But several indicators still point toward a recession on the horizon. Specifically, the difference in yields for short-term and long-term bonds, which is a proxy for investor confidence in the economy over the short term, which predicts roughly a two-thirds chance of recession coming over the next year. The yield for 10-year U.S.-issued bonds surged to its highest level since 2008 this week, further indicating a breakdown in faith in the economy. And you can ignore a lot of the numbers there. Just the last sentence is the important one. It's yet another indicator of a breakdown in faith in the U.S. economy, and faith is what powers the U.S. economy largely. According to borrower data released by the Federal Mortgage Service or Freddie Mac, American homebuyers now face an average 30-year fixed mortgage rate at over 7%. So it has gone up yet again. And it is my fear it's going to keep going up because I just have this sinking feeling, as I've told you guys before, I think the Fed is going to raise the interest rate at least one more time before the end of the year. Now, again, there's no direct correlation between the Fed's raising the interest rate and the mortgage interest rate, but there is. I won't bore you with kind of A leads to B leads to C leads to D of that. I've talked about it before, but it has to do what happens in the bond market. But anyway, the current interest rate is roughly it's gone through a roughly 150% increase from the same week in 2021 when the average rate was 2.86. So yeah, 2 years ago you could get an interest rate on a 30-year fixed rate of 2.86. Now you're well above 7, cruising close to 7.5. So this is not great. Lawrence Yun, chief economist at the National Association of Realtors, said if the Fed inflation is contained, then mortgage rates are likely to slide down to about 6% by year end. However, if the Fed continues to be aggressive and raise rates again, as I suspect they will, then mortgages could hit 8% by the end of the year. And I don't know about you guys, but that is a terrifying prospect for me. 8% mortgage rates, that's going to be really bad. Mortgage rates are closely tied to the 10-year Treasury yield, which has remained high despite promising inflation data and expectations the Fed will ease off rates. In the past year or so, the difference between mortgage rates and the 10-year Treasury yield has been larger than usual, and that difference is where a lot of the interest rate lives. Chen Zhao, Redfin's economic research lead, said mortgage rates could still drop without the 10-year yield coming down if there's a greater demand for mortgage debt. I do not see investors being anxious to scoop up mortgage debt in the current market. I don't think the economist here does either. I really, really think that the Fed is going to raise the interest rate at least another quarter, if not another half a point before the end of the year. And I think the reality of that is going to be mortgage rates at or over 8% in the 30-year fixed rate mortgage part of the industry, which I really hope not. The average 30-year mortgage rate has jumped more than 150% in the last 2 years. The only other instance when mortgage rates jumped by 50% or more over a 24-month period came between 1979 and 1981, coinciding with a pair of recessions marked by surging inflation and aggressive Federal Reserve. This is a troubling parallel for those hoping the U.S. will avoid recession in the coming months. In other words, Forbes does not think, nor does NAR or Redfin, that we talked about in the article here, I don't think any of them think that we're really looking to lower interest rate by the end of the year. We'll all cross our fingers and hope, but I do not think that is the case. I think it is in fact going to be higher. So the amount of properties on the market is down because of the interest rate, because as we know, about 70% of all mortgages in the United States these days, according to Freddie Mac, have an interest rate below 4%. So if you got a 4% interest rate, you're not putting that house up to sell unless you really are motivated to, unless you're either forced to or something really good is motivating you to do it. Because you'd be trading in your sub 4% interest rate for right now, potentially a 7.5% interest rate. So even if you bought the same house, you didn't spend any more or any less, you basically traded houses, moved vertically, which nobody does, but even if you did, horizontally I mean, what that would mean is your interest rate would be your mortgage rate would be almost triple. Not quite, but almost, your mortgage payment. So it's tough. That's why there's not enough inventory out there. That's what's going on in the market. The market is shrinking. It's sort of a race between supply and demand. And right now, supply is actually lower than demand because demand is still out there despite the interest rate. But every time the interest rate goes up, demand weakens. And were the market not shrinking in general, if we had, that 40% of the market that we're missing right now in the market, then the interest rate would be what's dragging us down, and it wouldn't be supply. But right now we've got both. And, supply is still low, and even with high interest rates, prices are still high. So we shall see. This is not sustainable, I'll tell you that. But anyway, let's get into some more fun stuff now that we have the market stuff out of the way. I really wanted to go over today, and the reason I brought Stephanie in today, so you guys could all kind of meet her, and those of you who watch it on YouTube or see it on Facebook can put a face with the name, because Stephanie spends a lot of time talking to clients of ours that are in trouble. She's the one who mans the front desk. She's the one who takes most of the calls, first calls from banks and things like that. She's the one who reaches out to you and says, hey, we need that paperwork. Please get us into it. Please get that into us. And so let's talk about what we do. So the first thing that happens typically is when somebody calls me up, they'll usually call me up on my cell phone, and I'll give that number out again, 661-714-1400. And again, that's my personal cell phone. I answer that 24 hours a day, 7 days a week. Again, 661-714-1400. We will not be giving out Stephanie's number on the air. She doesn't have to do that. Neither does the rest of the staff. That's just me. But typically what happens is you call me up, you tell me your problem, and I need to know your story. Now, I don't need to know the whole story because some people want to talk to me for 2 or 3 hours about their story, and I want to hear it all eventually. But I kind of need to stick to the pertinent points when we get started, so I kind of know what advice to give you, point you in the right path, try to provide some consistency for you, help you get to the point where you can sleep. So the first thing that happens is we need information. So I need to know how did you get into this problem? How are we going to get you out of it? I can't answer that second question until I know a lot more about the first question. So I need to know, what's going on? Did you lose your job? If it was during COVID, hey, we need to go talk to Cal HFA about their mortgage program, about getting you relief there. Is it a divorce? Is it, what happened? What got us into this problem? Is it a mortgage deficiency? Sometimes it's a title issue. Sometimes it's a probate issue. Sometimes it's something else. And we can point you in the right direction for all this as well. But the point is, I need the story. And I usually take a lot of notes and try to get things together. So we need to know about the problem. We need to know how far behind you're on your mortgage, if there's a problem with the title of the house, what other specific problems are with your other mortgage, whatever. The next thing we need to know is who is your mortgage servicer? Is it a first? Is it a second? What's going on with that? In order to get these things done, we're going to send you out, usually Stephanie's going to send you out kind of a package. And there are 5 documents in those package. You want to talk about the 5?
Yes. So the first one is going to be the third-party authorization, and then the next is going to be the homeowner bailout agreement. The third is going to be the financial worksheet, and the fourth is going to be the guide to writing a hardship letter, and the fifth is going to be the checklist for all of the items.
Yeah.
The most important 2 out of the 5 is going to be that third-party authorization. That gives us permission to talk to your mortgage servicer, but that does not allow us to make any decisions on your loan. That's an important part.
Let me elaborate on that a little bit.
Yeah.
We get this a lot. People think that when they sign an authorization for us, that means that we have control, and we don't. We don't want control. It's your house. It's your loan. Whatever is going on with the house is yours. We work for the client. They don't work for us. So even though we do this for free, and we're happy to do it, and even though we know a lot more about this than the client does, because otherwise why would you need us, we still work for the client. That's the way the progression goes. We work for you. You do not work for us. So we answer to you. So we do not have the right and we do not have the responsibility of making those decisions. Only you as the homeowner can do that. What that does do, the authorization, is it gives us the written right, the legal right to speak to the bank. And that's all. And one of the few things you'll ever hear me agree with a bank about across the board is, no one should be talking about your situation at a bank or any place else without your written permission. So that's really all it does. Again, it does not give us the authority to make any decisions for you. It doesn't give us the authority to change anything. It's very clear that this only is limited authority to speak to the bank on your behalf. That's all it does. So that's the third party. That's one page. It's third party authorization. It's pretty. We try to keep these things really short. You got enough complicated stuff to deal with. But so that's the third party authorization. Anyway, go on.
Yeah. So then the homeowner bailout agreement, it pretty much says that we really do it for free, and that we can't promise an outcome. And then in combination with those two, we'll need a mortgage statement, a recent mortgage statement. That'll give us, the basic information on your loan that we'll need to, communicate with your bank. And once we have those in, the third-party authorization will get sent to your mortgage servicer. That can take anywhere from 2 to 5 business days to get acknowledged by the bank, sometimes 2 weeks.
Depends on the bank. Some banks are better than others. The rule, they're supposed to be back to us within 3 days is what they're supposed to do. But that's more of a guideline than a law, and very few banks actually do that. Most banks take quite a bit longer than that. And there are various reasons for that. Usually it's just bad staffing and, in my view, incompetence, but that's just me. That's just my point of view. I don't want to hoist that on anybody else. It's just 30 years of doing this. You don't exactly see a whole lot of competence in the asset loss divisions of most banks. There are some, but they're few and far between. So again, the idea is if we send you these 5 documents, you got to fill them out and get them back to us. If you can get us back those first 2, the third-party authorization and the homeowner bailout agreement, that gives us the authority to talk to your bank. Again, not make decisions, just start communication with them, and they're going to take anywhere from 3 to 5 days, 10 days, sometimes longer to get back on that. And the homeowner bailout agreement is an agreement between our office and you as the homeowner, and it says we really do work for free because you should have that in writing. I mean, we say that all the time. You should have it in writing. We're happy to do that. And it also says we can't guarantee an outcome. And one of the big things you can spot on people who do this sort of thing, as we do, who do foreclosure defense and that sort of stuff, I don't think you'll find anybody else who does it for free, but just in general, anybody else who does it, if they promise you an outcome, they're lying to you. They really can't. Even if you're doing a bankruptcy, which has statutory outcome, stat protection, even then a good bankruptcy attorney will tell you that this is how it should happen, but I can't necessarily guarantee it because every case is different. So anyone who guarantees you an outcome right away should be a red flag. And we can't do that. I mean, I can tell you the odds and how we do this. We can guarantee we'll work our tails off for you, and we do. And I can guarantee we'll do it for free, and I can guarantee our outcomes are pretty good. About 80% of the time, I was asked this yesterday what our success rates are, and I say this all the time, about 80% of the time, so about 8 out of 10, we're going to find a permanent solution to keep the family in the house. Now, unfortunately, there's still that 20%, which is going to be a problem, and those we can't save. And if, we can't save everybody. We do everything we can, but if you have no income and you haven't made a payment for 2 or 3 years, you and that house are probably going to part ways. And if we have time at the end of the show today, we're going to talk about where, unfortunately, where that happened, where we were representing them, we were going to keep it together for them, but they just decided they were going to do it their way, and unfortunately the end has been rather disastrous. So we'll talk about that as well a little bit. But so those first 2 documents, we can get those back along with a copy of your mortgage statement. And the reason we need the mortgage statement is that has which bank you're with, which you can tell us as well. That has the loan number. That has all this stuff on there. And more importantly, sometimes you'll get a really big bank, like a B of A, for example. And B of A sorts its asset loss through 3 different places in the country. Knowing which office that they're working out of speeds along the process. So that's why we need those 3 things. But the object of the exercise would be to get us those 3 things as soon as you can, so that way we can start working on getting our, the file built and getting the authorizations in and all that good stuff. And while we're waiting for them to access the authorization, is when you send us everything else in. Because ideally, we like to have a file built when the bank comes back and says, okay, we're ready to talk to you. Yes. So that's how we do that. You want to talk about the financial worksheet and all that other fun stuff?
Yeah, so the financial worksheet, it's just for us to get a basis of your current financial situation. It doesn't get disclosed to anyone else. It's really just for us. And to give you, the most accurate advice for your particular situation. We use it for nothing else other than to advise you the best we can.
Yeah, it's informational only, so we need to know what's going on in your financial life. So, and I always tell a few stories because I think they're hysterically funny. I do love it when clients trust us. You can trust us. We certainly endeavor to live up to that. Sometimes that goes a little too far. So here are a couple of examples. On the financial worksheet, over the years I've been doing this, if, for example, you have a burgeoning new cocaine distribution enterprise and you're making $20,000 to $30,000 a month doing that, it is not for me to judge you. I don't think you should be doing that. I think that's a very bad idea, and I think you're going to wind up in jail. But my job is just to save your house from foreclosures in this case. So I have to tell the bank where that $20,000 or $30,000 is coming from. By the way, with this particular client, he actually put on his taxes, and this is a 100% true story, drug dealer. Honest to God, on his taxes under occupation, he listed drug dealer. And he actually put every penny he made. Which, I don't know if a guy who's a drug dealer being honest with the IRS is helpful in any way. I don't think that paints him in any better light. But believe it or not, the bank did not bat an eye at that when they did his loan modification. They just wanted to verify the income. And we had to tell them it was all in cash and small bills, and they were still fine with it. It's a strange world we live in. Give you another example, if you are a woman in her late 80s and you are losing roughly $250,000 a year in gambling debts, I need to know that, because you got a $250,000 annual hole in your finances. It's going to show up, and the bank is going to ask. In her case, that was why she couldn't make her mortgage payment, because she was gambling. So we decided she either needs to become a much better gambler or stop gambling. She went with choice B, and now she's fine. But those kind of things come to light. And they say with us, we do not give up that financial worksheet unless somebody subpoenas us for it. I can't promise you won't give up documents if I get a subpoena. And that's never happened. We're very careful about this stuff. We're very careful of our files. We're very careful of our clients' information. So we try to do our very level best to try to keep everything confidential. But we need to know, because whatever's there is going to show up in your bank account. You got to show your bank statements to the bank to get most solutions here with asset loss, and they're going to see it. And, for example, knowing the gal who had the gambling problem had a gambling problem, I was able to I didn't tell the bank she had a gambling problem. I told her she had investment issues that had gone bad, et cetera, et cetera. We found a way to cover it that was much more palatable to the bank, and that's why it worked out. A big part of what we do, actually, why don't you talk about that, the hardship letter.
Yeah, so the hardship letter, it's going to be requested out of every bank that you're applying for assistance. It's a consistent thing that we see in every file. Most of the time, it can be, just a brief selection of the options they give you, or they will ask you to write a letter in. Our guide is just a simple, straight to the point guide on how to write that letter. It's difficult sometimes to write all of your information in 2 to 3 in a page. And some people can easily write 2 to 3 letters on their situation because it gets so complicated sometimes. But yeah, it's just a simple guide on getting that into the bank. Well,
the most important thing with the hardship letter is we need to build, not just for the letter, although the letter is a good way to put that, we need to build what we call the simple narrative around the office. And the reason we call it that is because it is very, very rare that somebody who's in trouble can tell us or tell the bank how they got here and how we're getting out of it in a page. Life is way more complicated than that. And just the worst example of this ever, one of the worst days of my life professionally, was I had to sit with a woman some years ago who had lost more in 18 months than any human being should suffer in a lifetime. She'd lost a child. It cost her a marriage. Both her parents passed away. She lost her job. I mean, life just turned on her through no fault of her own. And she wrote me a hardship letter that was 52 pages long, handwritten. And again, I want to know every word. I want to know what's going on so I can best advise you so we can help you out with this stuff. But I had the very unenviable task, and this is what made it the worst day of my professional life, of sitting with her and explaining to her that a lot of what she's talking about is not relevant to her mortgage. And I can only say for all of you out there, I hope you never have a day in your career where you have to sit across from somebody and explain to them that the death of their child, however traumatic, is not necessarily relevant to the process that you're working on. Because, of course, it's relevant to everything. My gosh. But it was we had to reduce that tragedy down to one sentence, which is grossly unfair to her and her situation and her child. But it didn't matter to the bank. So we have to build, now hers is an extreme case, obviously, and I hope those of you who are out there, hope no one else has that extreme case, but the whole idea is to build a simple narrative. This is who I am, I want to keep my home, this is how I got here, this is what I'm doing to get out of it. And you got to boil it all down to basically 3 paragraphs, because that's about as much as a bank will read. So building a simple narrative is super, super important, and one of the keys to success. So we'll talk about a little bit more of this. Now, I see by the clock on the wall it's 10:25, so tell you what, let's go to break. First, before we go to the big break, I want to thank some of our sponsors. I want to thank the Mortgage Hub. Sam Chong out there at the Mortgage Hub sponsored the show. Absolutely fantastic. Best lender I know. I also want to thank 2 new sponsors we brought on. We'll have commercials for them shortly, but at the moment, DW Cookies in Canyon Country. If you guys have never tried DW Cookies in Canyon Country, do yourself a favor and get out there. We are spoiled in Santa Clarita. We have some fantastic places for cookies in town, and I will tell you, without fear of contradiction, I think DW is the best in the valley. I absolutely love them. They're fantastic. We bring in cookies every week here at the station. I think everyone here would agree with that. Maybe just because we bring them in every week, I don't know. But DW Cookies is fantastic. They're in Canyon Country. And last but not least, I want to talk about Omar Ramirez, who is a handyman, soon-to-be contractor who we use, does a lot of stuff for us and our clients. I refer to him as one of my secret weapons for getting work done on houses and stuff like that cheaply. His prices are really very, very good. His work is spectacular. He works his tail off. And he's conscientious, which you don't see in too many people in his position. And he is fantastic. So those 3. And last but not least, I also want to do one last little thing that I promised I would do for the good folks at AC Dave. There is a charity event coming up. at, where did it go? I'll have to bring it back. Anyway, there's a charity event coming up in, I think it's Lake Elizabeth. We'll talk about it when we're back from the break or at the end of the show, where they're bringing 10% of everything they bring in goes to families who are struggling with addiction, domestic disputes, stuff like that. I'll get you the information. We'll get it up on the website as well. But let's go to break. Let's hear from some of the other sponsors. And when we get back, hopefully we'll have Rebecca Franklin from the president of Cal HFA Homeownership Relief Corporation. Hello, welcome back. You've reached the Real Estate Fix with Rich at KHTS 98.1 FM, AM 1220, your hometown station, where we talk about all sorts of real estate issues and our fixes for them and how we take care of these things. I've been doing this for about 33 years, fixing people's real estate problems and sorting out their issues. We're waiting patiently for Rebecca Franklin, president of Cal HFA Homeownership Relief Corporation, to call in. Hoping to talk to her today about some of the stuff that Cal HFA does. In particular, we want to talk to her about the California Mortgage Relief Program. But I see we don't have her quite yet, so I've been threatening to do this for quite some time. So my wife, if you're listening, you're going to love this. I think it's time to tell the curly fry story. Just because I've never had to kill time on a show before because a guest wasn't ready, but we'll do it because I've been waiting to do this. So I'm kind of excited to be able to do this. So I'm glad you could be here because you've heard this story many times. So now you can hear it on the air. So it goes like this. I started working when I was very young in the Santa Clara Valley. Grew up out here. And when I was 12 years old, I forged my birth certificate to get a job, and I got a job at the local Wendy's on Bouquet. I actually opened that store as part of the crew who opened it. I was a big kid. I looked a lot older than my age. And let's just say it was a lot easier to do those sorts of things when you were years and years ago, when the earth was flat and the dinosaurs still ruled the plane. I have a British birth certificate. I wasn't born here. Nobody knows what a British birth certificate really looks like, so it was relatively easy to forge. Anyway, I got myself a job at Wendy's. I was 12 years old, and I was working back there. And the way it used to work at Wendy's is two things that used to happen there. Well, first of all, they used to make the chicken sandwiches with actual chicken that you would actually pound into a batter and then put in an actual deep fryer. Now it's all just frozen. It's still delicious, but now it's different. So you had access to those machines. And what they would do with French fries is if they got soggy because they were under the heat lamp too long, they would throw them out. And I took a look at that and thought, well, geez, I like soggy French fries. They might be delicious. So what I decided to do one day was take some of these soggy French fries, and I don't know why I did it, but I rolled them in the batter for the chicken, and I found this little basket I could put them in, and I dropped them in the deep fryer and pulled them out, and sure enough, they curled up and were breaded and were delicious, i.e. the curly fry. So yeah, I invented the curly fry. Right now, my wife is laughing her head off because we've been arguing about this since our first date 31 and a half years ago. It's probably not something you should give on a first date, but I told her I invented the curly fry, and she thought I was crazy and still does. However, it's true. I invented the curly fry. At the time, Wendy's had just been bought by a new company, and the guys who owned it were this consortium of wrestlers, believe it or not, because my life is just this strange. They were going to all the Wendy's, the high-capacity Wendy's around the country, and they'd come to the one here. At the time, it was the one on Magic Mountain. They're still building the one in Bouquet. They came to check it out, and they showed them what they called Rich's fries, which were curly fries. And they were very excited about this because it was something that was garbage that they can now sell. So they were super excited about it. And so about 6 months later, Wendy's came out with a curly fry. It didn't sell terribly well. It only lasted about 6 months, and they did away with it. Now, if you look this up on the internet, you will see lies. One says that it was actually developed in, I think, Detroit in the 1960s. One says it was, I think, Kentucky or someplace in the South in the 40s. These are all lies. I invented the curly fry, and I'm going to stick to that. Now, I am so... Oh, good. She's on the phone. I am so adamant about this, and my family has been arguing with me about this for so long, that in my will it says, on my tombstone it is to read, Rich Szerman, husband and father, those are the two most important things, inventor of the curly fry. Now, my daughter says she's going to live longer than I am, and she's going to go up to the gravestone and she's going to thinks he invented the curly fry. That's her little joke, and she may just do it. But for once and for all, I invented the curly fry. I peaked too early is really what you're learning here. But I invented the curly fry. Now, I'm told Rebecca is on the phone. That is fantastic. Carlos, do we have her? Okay, they're trying to get Rebecca on the phone. So anyway, I invented the curly fry, and I'm going to keep talking about this until my wife agrees with me, or until I die and it's on my headstone. You guys can visit the cemetery and say, hey, that's the guy who invented the curly fry. I also think it'd be hysterical if you're walking through a cemetery and you see, Rich Szerman, inventor of the curly fry. Because of all the things you would put on a gravestone, of all the things you would point to as your life's goal, your life's accomplishment, that's probably a weird one. And I think it'll make people laugh. I like to make people laugh, so why not? So yeah, Rich Szerman, inventor of the curly fry. Anyway, how are we coming, Carlos? We going to get Rebecca on? We going to find her? Oh, we're trying to work it out. I love live radio. Anyway, what we're going to talk about should we actually get Rebecca on the phone, what we're going to actually talk about, get her on the air, is the California Mortgage Relief Program. And there's a great article in the Los Angeles Times, if you've not already read it. It's fantastic. It talks about California. The title is California Offers Help for Homeowners Who Missed Mortgage or Tax Payments. Now, the way we found out about this program and Stephanie can talk about this a little bit as well. The way we found out about this is we had a client come to us about 6 months ago who said, I want to get into this program, but I owe more than $80,000. I'm paying it down to $80,000 so that I can get into this program and get this money for free. And I'd heard some stirrings about it, but I hadn't anybody tried to do it before. And my response at the time, and this is typically my response about government programs, is, okay, you should definitely pursue that because, I mean, my gosh, you make it work, make it work. But in my experience, most government programs become much more complicated to qualify for and get into than they really should be. So you think you'd qualify and you simply can't. So what happened with his particular situation is we said, okay, we'll do all the stuff we normally do, and at the same time, let's pursue the program and see what happens. You want to speak? You want to tell people kind of what happened with his file? It was a lot of fun.
He went ahead and submitted the application online, and I believe it was about 2-3 weeks later he got a decision back. And that was pretty much it. It happened real quick, and it was... They
approved it. They gave him $80,000, and that solved his foreclosure problem. He is now out of foreclosure. The books are balanced. He's in good shape. He's no longer in danger of losing his house. And were it not for the help of Cal HFA and the California Mortgage Assistance Relief Program, he would have lost his house for sure. And then we would have had one more homeless person in Los Angeles, which we do not need. So instead, the bank got the money. He's got the house. We're all good. So let's see if we can get... I'm told we have Rebecca online. Let's see if we can get going on that. Let's see. Rebecca, you there?
Yes, good morning.
Oh, fantastic. Nice to meet you. Okay, everyone who's listening, let me give you a little introduction here for you. On the line, we have Rebecca Franklin, who is president of Cal HFA Homeownership Relief Corporation. She's also the director of Enterprise Risk Management for Enterprise Risk Management and Compliance. She came to Cal HFA following a stint at the California State Compensation Insurance Fund, during which she was director of innovation and led the establishment and development of the State Fund Innovation Design Center. She previously was Enterprise Risk Manager at the California Public Employees Retirement System from 2015-19, held multiple positions at Cal STRS, including Associate Management, Organization Planning Consulting, and Program Strategic Planning and Performance Analysis. She earned a Doctorate of Education and degree in Education and Organizational Leadership from the University of the Pacific and a Master's of Arts degree in Organizational Leadership from Gonzaga University. Is there anything I missed out there? Is that all? Is that
no.
Enough of a CV? You covered it all? The point is Rebecca Franklin knows what she's talking about. She is who you want to hear from. She is who you want to talk to about these programs because she's the president of Cal HFA's Homeownership Relief Corporation. And not enough people know about this program, and that's why we asked you to come on today, and I appreciate you doing it. Thank you very, very much for coming on with us. Sorry about the technical stuff getting you on the air. The Cal HFA has this fantastic program. Can you want to elaborate about that a little bit, Rebecca? People know about it?
Yeah, so we have a program. We've been running it for about 1.5 years. It's called the California Mortgage Relief Program. You can find all the details out at camortgagerelief.org. And it's a wonderful grant program. So grant program, there is no paying it back. There's no lien. These are it's up to $80,000. We have different ways we can help you. We're either helping you kind of on your past due mortgage payments. Maybe you missed some due to the pandemic. Maybe you missed some property tax payments. Maybe you missed some mortgage payments, and then you had to do a loan modification kind of in the last few years with your servicer. There's all these different ways we can help you. Basically, if you were affected, if you own a home in the state of California, or you don't even have to have a mortgage, you own a home and your property taxes were affected, and during the pandemic you kind of, were affected and you missed some payments somehow, you should really check out our website, connect with us, connect to our call center, because we're here to help you. And the important thing is it's real, that you don't have to pay it back, and this is a free program. There's no application fee, nothing like that for homeowners, California homeowners. Yeah, we've put quite a few clients have come to us, and we've turned them onto the program, we've helped them get registered for it, we've walked them through it in some cases, and the program is fantastic. And up to $80,000, and I can tell you, from personal experience with our clients, we've had several people now go through the program, get approved, get the money, and pay off the debt. So we've seen it from soup to nuts. We've seen it from beginning to end at this point with several clients. And you do not pay it back. It is up to $80,000 in free money. Hear what I'm saying out there? $80,000 in free money if you are in default. If you got a mortgage problem and you're not talking to the Cal HFA right now, you're missing a bet. I mean, it's all the traditional stuff you can do as well, but you absolutely should be talking to Cal HFA. This is, and I don't get to say this enough about government programs, this is a fantastic program. That I also don't get to say this is well enough either. It's really easy to qualify, and it's very well administered. It's very, very quick. For a government program, it is lightning fast. And I suspect we have you and a lot of other people to thank for that, Rebecca. Yeah, no, and we also have a lot of services that we provide through the program. if you need help, we have free HUD certified housing counselors we can connect you to. We have a free legal services we can connect homeowners to. Even if your situation is kind of messy, you're in bankruptcy, you're getting divorced. I mean, all of these different scenarios, everyone's kind of this unique scenario. We're here to help every situation. And even if the program maybe isn't exactly for you, we want to get you educated on what your rights are. And so, really what we want in the program is just to connect with us. We're here to help. Sure. I really talk about this. This sometimes is a private situation. These are personal things. People work really hard to get to a home. They sacrifice a lot to be able to buy a home, and we understand that. We want to treat your situation personally, and so we want you to connect with us because we want to be able to get you educated on what your options are as a homeowner.
We're in a state that's dealing with an absolute runaway homelessness problem that is not made better by more people going into foreclosure. Also, the banks don't want to have the house go into foreclosure because all they do is lose money on a foreclosure. We've been very successful in preventing those kind of on our own for many, many years, and we still are. And when we have a government program like this that we can reach out to and we can refer people to, oh my gosh, it is such a wonderful toolkit to have in the bag as far as saving people's houses. So it is absolutely fantastic. And it's not the only program that Cal HFA has. It's just the one we're talking about today. Cal HFA has all kinds of resources to help you prevent foreclosure and buy houses and all sorts of great stuff. So if you've not checked into Cal HFA, you really, really should. They have a good website, too. They make it really simple, really straightforward. So, hey, Rebecca, if you're up for it, I got a couple of questions for you. I got some questions because I knew we were going to have you on today, so I gathered up some questions that we've heard in the office that I'd like to run past you, if that's okay. You ready for some questions?
Absolutely.
Terrific. The first one I'm going to ask, maybe I should let you ask it because you don't know how to field it to begin with. The first one is from a client who I hope is listening out there. Her name is Rita. Her last name starts with an H, so from Rita H. And she honestly said this. She said,
does the California Mortgage Relief Program help with foreclosures?
Now, before you answer, Rebecca, here's what happened. She apparently called the call center because she couldn't make heads or tails of the website, which I don't understand why. It's a very good website. It's very simple. So we helped her get through it. But she called the call center, and whoever answered the phone at the call center that day said, according to her anyway, said, we don't help with foreclosures, which I really don't think is what they told her. But it's possible. But the point is, and I wanted to hear it directly from you, does Cal HFA help with foreclosure, prevention of foreclosures?
Absolutely. We help with foreclosure prevention. We may ask you to work with your servicer, right? We do have to work with the servicer if you're in active foreclosure, it is us working with the servicer, but we have had a lot of success working with the banks there. We've had people come to us with the date of sale within 48 hours, and we've gotten their application through and gotten that sale postponed and been able to save homes within 48 hours is some of our fastest turnaround time.
Geez, Rebecca, I thought we had the record. We sent you somebody who was 72 hours short of a foreclosure and you were able to help us out, but I didn't know there was somebody who cut it as close as 48. I thought for sure we were the record holder there. No, we did have somebody that we sent through the program with 72 hours prior, 3 days prior to a foreclosure sale date, and they managed to get in that quickly. So, I mean, it really is that good a program if you just engage with it. And again, I can't believe I'm saying this because this is a government program that is actively this useful and easy to use, which is a rare confluence of events. So yes, absolutely it helps with foreclosures for sure. That's the whole point. That is the idea. So here's another one. This is from a client who's near and dear to our hearts, a friend of the show, friend of the office. Beverly F. How do I apply? Is it online only?
Yes, it is online only, but we have so much support to be able to help you through this process. So if you go to camortgagerelief.org, you can go and do our online thing. If you have all of the needed documents for the application, it takes less than 10 minutes to fill out the application. Yeah. So it's online. But if you're having problems, if it's confusing, because it can be confusing, if you're stressed out, you call our contact center number. The number's at the bottom of the page on our website, all over our application, and they will walk you through step by step. And even then, if you need more support, you ask our contact center, we will get you with a HUD certified housing counselor, and they will sit with you and be able to do it. So don't be intimidated by the online application. It is the way we do collect the information. It just helps us be that quick and able to process these applications, but we're here to support you in every step. So don't let that be an intimidation factor.
Well, actually, in that case, Beverly is 90 years old, and so she does not. But once Stephanie actually we brought her to the office, and Stephanie actually helped with the help of your staff, helped walk her through the application process. And by the time we were done, she was ready to go do stuff on the computer now. She likes computers better as a result of that. So
exactly.
It's literally that easy.
It's compatible on your phone. So if you don't have,
of course,
you don't have to do it on a laptop. You can do it on an iPad. The and all of our stuff is translated into 6 languages automatically. Our contact center can support a bunch of different languages beyond those 6. So if you're more comfortable in processing and hearing things in a different language, your preferred language, then we also support that as well.
Cool. Hey, here's another good one from Roger R. If I get denied, can I reapply? If you get denied by the California Mortgage Relief Program, can you reapply?
You can reapply. And also if you get approved and you didn't need say you got approved a year ago and you only needed $25,000, but your circumstance hasn't changed and you need a little bit more help, you can reapply again. It's up to $80,000. So you can continue to come back to the program as long as you meet the criteria and able to, come back and get up to $80,000. So you can, you could be approved multiple times. But I will say if you were denied, you want to make sure that, we give you the reason why you were denied.
Exactly.
You want to look at that criteria and see if that changed.
Well,
because there's certain criteria, if they haven't changed, then you probably will be denied again.
Well, we've got one that we can tell you about where she applied yesterday and was turned down because for some reason it came back as she's not a natural person. And she's very much a person. The house is not owned by a corporation. She clearly checked the wrong box. But it'll be easy enough. We'll get it fixed. So, yes, you can absolutely reapply. That's the other great thing. If you apply and get turned down, they will tell you why, and you can address that problem, get it fixed, and go get approved. It's really, they really make it easy. Here's another. You want to ask this one, Steph? From Michelle? Yeah.
Yes. Can I apply again even after getting money from the program if I still have unresolved debt that would otherwise qualify?
Yes. As long as you haven't hit the max of the program, which is the $80,000. So you can reapply. So say you got mortgage relief and now you need property tax relief or vice versa, or you just need more mortgage relief. The name of the game is, as I say, is $80,000.
Yep.
So we're here to help up until that cap.
And that is exactly the case in her case. She got mortgage relief from the program, got her mortgage current. She used about $25,000, $30,000, and now she's got a tax problem. So we're absolutely going back and reapplying for that. Okay, here's another good question for you before we let you go. How long will the California Mortgage Relief Program be available, and what type of defaults does the program cover?
We are first come, first serve until the funds are depleted. So, if you are having any sort of mortgage, don't wait. Come talk to us.
Yeah.
They're here, they're now. So let's get in touch and get you help now. We are offering, I'm trying to think, 3 different types of offerings right now. So if you are behind, if you look at your mortgage statement and it says past due balance, we're here to help with that past due balance. So you missed mortgage payments. If you missed mortgage payments in the last 3 years and you did what we call like a loan modification, a partial claim, or a deferment. Yep. So you used to have that past due balance on your mortgage statement, but then you worked with your servicer, and now you have what's called a second lien, right, a silent second. So you used to, and now it's gone somewhere. It's gone on the back of your loan. We're helping you with those. And meaning you had a past due amount, but you didn't pay it, but you worked with your servicer to kind of push it down to another time. Then call us. We help with those. And then your property tax. So if you miss property taxes and if you don't have a mortgage, right, then, come. We're here to help. If you don't have an escrowed property tax payment, we're here to help. If you missed your property tax payments, and if you have reverse mortgages as well. I'm sorry.
I wanted to make sure we mention that. It also applies to reverse mortgages. So if you got a reverse mortgage that's gone, you can do that as well. If you have an issue, we got to contact these people. If you'd like to contact Cal HFA, if you don't want to do it yourself, please feel free to give our office a call. I'll be happy to help you. We put dozens of clients through this program now, and with very, very positive results. We even had one where the bank wasn't actually on there, and Cal HFA helped us get that bank on Cal HFA's roll so the client could then qualify for it. So that's how far they're willing to go. They're even willing to work with the lender to add them to the rolls, because it was a very small lender, so that they can then qualify. And the lender wants it too because they get the money out of it. So it's great for everybody. It's government money that can be used to sort your problem out. You got to get into it. You just got to. Any final thoughts, Rebecca? Anything we missed you want to touch?
No, I just really urge people, if you have a home in the state of California, we're here to help you, and just connect with us. Your program. Thank you so much for, bringing me on and talking about this program. Like you said, sometimes people don't believe it's real. It's a government program. It's easy to use. It's free money. I don't understand, but we are real and we're here to help. And, people didn't cause the pandemic. They didn't cause this financial burden that it caused on them, and we're just here to help and connect with us. So I appreciate you bringing me on.
Oh, my pleasure. Yeah, we try to bring these issues to light because not enough people know about this. It's literally free money. I mean, what could be better than free money? My goodness, it's fantastic when it comes to your mortgage bill. It's fantastic. So if you'd like, give us a call. You can reach me at 661-714-1400. You can go to their website directly. It is a fantastic program. Rebecca, I want to thank you very much for coming on with us today. Sorry about our technical problems getting you on air. Thank you very, very much for coming on and helping spread the word about this. You guys are doing fantastic work, and thank you, by the way, on behalf of the clients of ours that you've helped, because we've had quite a few, and without your help, without the agency's help, they would not have homes right now, and they do because of Cal HFA. And I don't know what greater, endorsement I can give. So thank you very, very much for that.
Thank you.
So
Have a good day.
You too. Bye-bye, Rebecca. We're going to go to commercials. We're going to hear from some of our sponsors. When we come back, we'll wrap up the show. Hello, welcome back. You've reached the Real Estate Fix with Rich on KHTS 98.1 AM 1220, your hometown station. Thank you guys for listening. Thank you guys for listening through the break. I appreciate it. And for those of you who listen to the show regularly, thank you very much for doing that. And yeah, I love live radio. So if you listened to the last segment, I'm terrible. My apologies again to Rebecca Franklin, the president of Cal HFA's Homeownership Relief Corporation. I'm glad we were able to get her on. We had a bit of a technical snafu there, so I'm glad we managed to get her. But I love live radio. It's loads of fun. Because if those of you who are wondering if this is scripted, well, I guess now you know it's not. But it's okay. Well, we had a good time. And most importantly, the information got out there. So those guys who are listening, please, you got to check out that program. Before we go any further, I want to talk about, I was hoping to do this with Rebecca, but we ran a little short of time. I want to talk about the website for a little bit. Something you want to get into the website for
Yes.
a little?
So the California Mortgage Relief website, it's really easy to find. Just search that on the internet.
California Mortgage Relief, yeah.
Yes. And once you get on that website, it answers pretty much all your questions. It has eligibility requirements, mortgage servicers that are participating in the program, like the list Rebecca mentioned, the property taxes, let's see, what is it? Default on the mortgage.
Yep.
And what was it?
Well, anything that's defaulted on a mortgage, it's back due taxes, reverse mortgages as well. It could be because they did forced place insurance and are charging you for that. Anything that has gone negative in your mortgage, theoretically, it could be picked up under this program. They really made the acceptance very, very wide. Now, just to give you guys some background, usually when a government program comes out, what happens is it's fairly useless, typically, for the first year. And then when they have money to give away, they can't seem to give it away fast enough because they can't get enough people qualified. But in this case, and I got to tell you, this is a wonderful rarity, with Cal HFA and the mortgage relief program, they seem to have got it right pretty much off the bat, because we had people who came to us and said they wanted to do this program, and I warned them against putting all their chips on that number, because government programs are not usually a great bet. Very few people actually get them in reality, and every one of them has managed to get help. It has been tremendous. And Rebecca didn't get into this, but they've only used up about half of the money. So they got $1 billion, and a billion with a B, to give out, and they've only really used up about half of it in 18 months. Because I don't think enough people know about the program. And we know about it. We think it's great. And I'm a little worried that the more we tell people that, it's going to go away. But because we're going to use up the money. But yeah, it's a fantastic website.
Yeah, and the website also has a questionnaire. So if you're not sure if you meet the requirements that are written on the website, you can answer the questionnaire, and it'll tell you whether or not you meet the criteria. And if you do, you can go ahead and submit an application. It's that easy. Now,
if you submit an application and they turn you down, I like one client story. One of the things they'll turn you down for is if you own more than one house. Now, she has a rental property, but it's not really hers. It's her family's, and she kind of manages it, but it's got her name on it, so she's on title. So what we did in her case, what we are currently doing in her case, I should say, is we put that house, the rental house, into a family trust, because they didn't have a family trust. Now they do. They moved that house into a trust, so now she can reapply, because when she's asked the question, do you own other property, she can say no, because she doesn't. She didn't really own the other one, but now she can say that, and that'll get sorted out, and that'll get her out into the program. And we've gotten very, very good. I'm taking credit for Stephanie's work. Stephanie has gotten very, very good at helping people kind of sort out those problems so they can qualify for that program. Because, and I cannot say this long and loud enough, it's $80,000, up to $80,000 for free. I'm frankly kind of sad that I made my mortgage payment throughout the pandemic, because I would like to be able to take advantage of this. I wouldn't mind a state agency coming in and paying down my debt by $80,000. That'd be fantastic. Now, it's not meant for me, because I'm able to make my mortgage payment, and that's who the money's meant to help. So I'm obviously being only semi-sarcastic. I would very much like to have $80,000. I'm sure everybody would. But my goodness, if you are a homeowner and if you can hear my voice right now, take a look at this, because it may be something that helps you. And if you want to know about it, give us a call. And you can always reach me at my cell phone. I give out my personal cell phone number on the air every week, 661-714-1400. Again, 661-714-1400. That is my personal cell phone number. And I answer that number 24 hours a day, 7 days a week. If for some reason I don't answer, you can always text me or leave a message. Texting is always quicker. And I will call you back. I always get texts when I'm on the air. I don't know why my phone is always the busiest when I'm here for an hour every day. One of them is probably from my mom. But anyway, but yeah, we're returning all those calls. We get all sorted out for you. But it's a fantastic, fantastic program. And I would absolutely encourage you guys to do it. Is there anything else you want to talk about as far as the website's concerned?
No, it's just really simple, straightforward. It's probably the easiest website to navigate out of all the government programs that, or the government websites that I've seen.
Yeah, it's the simplest I've ever seen, for sure. It's not a close call. So, and I will say, because of our technical glitch today, I got to tell the curly fry story, which I've been threatening to do for the last 6 months, so I'm very excited about that. Not as excited as I am about getting information out there for people to help save their houses and get them out of trouble and solve their real estate problems, but at least I got to tell the curly fry story. So hopefully 30, 40 years from now, 50 years from now when I die, if you're walking through a cemetery and you see a guy with his last name spelled funny and it says creator of the curly fry, you know why. Little secret you can keep. I don't know where I'll be buried, but we'll figure that out later. Anyway, so that was fun to talk about. But in any case, this really is a fantastic program, and if you guys have a need for it, you really should get into it. It really is good. And I have time for really quickly, just a minute on a cautionary tale. If you come to me and you're having a problem, and you can't afford your mortgage payment, and you're many months behind, and I tell you there's no way to save this, you have $200,000 in equity, you need to sell the house. You can choose to ignore me if you want. That is absolutely up to you. It's totally fine. But when you come back a few months later and you say, Rich, they foreclosed on my house, can you believe it? I'm going to say, yes, I can believe it. I told you that was going to happen. And when you say, Rich, they're foreclosing on me, what do? I'm going to tell you to go find an attorney to defend yourself, because I can't help you. You lost the house. You're being evicted. The new owner has a right to send you out. And unfortunately, in the Santa Clarita Valley, very shortly, there's about to be another homeless family. We're doing the best we can to try to find them some resources, because they didn't listen. They should have sold the property. They would have made between $150,000 and $200,000 in cash, which would certainly make the relocation a lot easier. But instead, they chose to stick their heads in the sand. They refused to believe that a bank would actually foreclose on their house. And you know what? They did. They foreclosed on their house, and now it's done. Now the house is owned by somebody else. Now they're throwing them out. The eviction has already started, and in the next roughly 60 to 90 days, they're going to have no place to live. And all of that could have and should have been avoided if they had just listened. And if you don't take my word for it, talk to other people. That's fine. You can talk to several people. It's a big decision. But when you don't make the mortgage payment, it's not a mystery. The bank's going to foreclose. So anyway, sorry about that. But thank you guys for listening. I've been Rich, your host on KHTS 98.1 AM 12.